Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM, and I'd just like to point out my email address. The email address is rshaw@fxcm.com. If you would like to correspond with me, that's the email address to use. Just going to go ahead and bring up our disclaimers. We'll start off with the high risk investment warning, and I'll keep this on screen for a few moments. Good morning, Kim. Hello, Raj. Nice to have you both on the webinar. Thank you, everyone, for signing in this morning. It's much appreciated. All right, let's just bring up the next disclaimer, which is our market commentaries disclaimer. I'll keep this on screen for a few moments as well. And our references will be MarketScope 2.0 and TradingView.com. All right, let's just bring up TradingView.com. There was 2 requests yesterday just to do a reference candle analysis on the real yield. We're going to do that, and to look at the NASDAQ, we'll look at that as well. What we have at the top here is the real yield. I just want to show you guys how I have calculated it. I've got the US 10-year minus the 10-year break even. For further explanation, I refer you to yesterday's webinar, but the idea here is we're looking at the real portion of the nominal interest rate. This comes after yesterday's Fed minutes. Effectively, there was some discussion in the meeting with regards to inflation and the danger of inflation increasing. And what subsequently happened to that is that the real yield has popped higher. Okay, the real yield here has moved higher. Now, what's happening at the moment, if we go down to the daily chart, you can see from about this point here, which is around the 20th of July or so, we've got the real yield moving up. And if the real yield's moving up, since the 20th of July, it's dragging US dollar up with it. Okay, so the yield supporting the greenback, as long as we're going to have the news or topic of inflation going higher, it would, in my opinion, be supportive of a higher real yield, and a higher real yield would tend to be bolstering the greenback. At the same time, what we looked at yesterday is, well, if the greenback is being bolstered, what's happening to gold? So if we change this through to gold, you can see that gold is moving in the opposite direction. So there's an inverse correlation with gold and a positive correlation with the US dollar. So what we suggested yesterday is we keep an eye on the real yields. As long as those real yields are supported and buoyed upwards, I think that there is going to be pressure on the yellow metal, and I think there's going to be support for the greenback. At the same time, I think it's affecting the risk markets as well. The risk markets are the stock markets. And what we can do is we can bring up the NASDAQ 100 just to take a look at what's happening with the NASDAQ 100 and the interplay with the real yield. And you can see that it's also having this opposite effect. It's having this opposite effect. Now, the first thing we're going to do here is we're going to look at the reference candle analysis for the real yield. Then we're going to look at the NASDAQ in a little bit more detail and see if there's still going to be a downwards pressure. Okay, so let's get rid of the NASDAQ 100 here. We'll do the analysis on market scope. And let's just do a reference candle analysis on the weekly chart of the real yield. And see, this is a tough one, to be honest with you. I think what we can do here is put in a peak and trough analysis. Okay, so what we're going to do is we'll put in a trough over there. We'll put in the peak over here. We'll do it strictly. We'll do this one strictly. So once we've got the references over here, here's the references, you can see that this one actually goes here. Okay, because that's an inside period. That means this is the next higher trough. Here is the next higher peak. So at that stage, it's moving up. We get a little bit confused by this movement down here, but I think what we've got to do then is shift these two over here. And this is the way we'll do it. Higher trough followed by the higher peak. So the reference candle here is I'm going to use this as the reference candle high, and here would be condition 2, 3. If we use this one or this one, then we're only getting the confirmation this week. But by and large, we can see that we've got the higher trough followed by the higher peak. I think the better way to look at this, Raj, is using peak and trough analysis. So want to just keep the trend using the higher trough for the higher peak, and there is the trend. In fact, if we put in gold underneath, we can see something quite fascinating. You'll have a contra. You'll have a contra. So where's the contra? We can put in the peak over here. You can put in the trough down here. Okay, so once you've got the references, then you can see that here is the weakness now starting to seep into gold. From, why is there weakness? It's coming from the real yield. So here we've got a lower peak. Okay, and this is actually a lower trough. So gold's moved into downtrend. And we explained that again yesterday. Why would the real yield be affecting the precious metal? And there's actually quite a distinct relationship between fixed income and gold. Bonds and gold compete for safe haven monies, but there is no distribution on gold. So when interest rates move up, it makes bonds more attractive. So more money flows in. So as those interest rates move up, it becomes more attractive relative to gold, and gold pushes down. So that's what's happening here. So again, the real yield is where the story is at the moment, and I think that we've got to monitor how high it goes. A lot of the pundits that I've been listening to suggest that the risk is to the upside, and I think that from work we did last week, the energy prices here may be contributing to a tougher fight on inflation. And if there's a tougher fight on inflation, well, that's going to keep interest rates elevated. That's bad for risk assets. That's bad for risk assets. Let's go through to NASDAQ. Let's do a top-down analysis of NASDAQ. See what we can glean from a top-down analysis. Okay, we'll start from the monthly and we'll work our way down. We'll see if we can come up with something workable over here. All right, so just give me a moment while the NASDAQ populates. I'll just give it another few seconds, otherwise we'll use TradingView. I just want to see if there's any questions that are coming through. Yeah, so the trend on the real yield is up at the moment, Rash. Quite right, quite right. Okay, quite right. And because we've got that upwards trend on the real yield, it's really putting the risk market under pressure. It's supporting the greenback and gold coming under pressure. Okay, here's the NASDAQ. And what we're going to do is a top-down analysis from the NASDAQ. And what I'd like to do is go through to the monthly chart first and take a look at some trend following indicators combined with a momentum indicator. And what we've got here effectively as our trend following indicators are two exponential moving averages. Just to give you the settings here, the green is the 5-month exponential moving average. The orange is the 10-month exponential moving average. And the RSI is the momentum indicator we're going to be using. It's just, there's a slight nuance behind it. I'm using number of periods 10, and I generally calculate that on the median. It just gives me a little bit of a smoother RSI, and then I spread the overbought, oversold conditions out. Overbought would be 80, oversold would be 20. But for this type of analysis, oversold, overbought is not really going to feature. What we can see, though, is that the trend following indicators are in bullish mode, aren't they? The short exponential moving average, the 5-month, is on top of that orange 10-month. So there does seem to be a long-term primary trend moving upwards. And if that's the case, what kind of momentum's there? It looks like it's a positive momentum. Okay, so on a primary trend basis, to me, it does seem as if we've got some trajectory to the upside. What's the issue? What's the problem? Well, this is a monthly chart. Take a look at what's happened in August. Take a look at what's happened in August. Well, we've got this heavy sell down. In fact, this is a bearish engulfing pattern on the monthly. I'm not certain it's going to end as a bearish engulfing. Remember, we're looking at a monthly chart. If we're looking at a monthly chart, we're going to get the close at the end of the month. That's 2 weeks away. Okay, so by and large, there does seem to be some bearishness for August. I don't think we can dispute that. But the underlying momentum is upwards. Now, we'll go down to the weekly chart. The weekly chart will be more granular than the monthly. So let's go through to our weekly chart. And here we can start putting in our peaks and troughs just to track the trend. And let's just see where we would start. And let's start from this area here. So we can put in the trough over here. All right, we can put in the peak over here. That's our references. Once we've got the references, then we can see we've got a series of higher troughs followed by higher peaks, which is the definition of an uptrend. Okay, again, higher trough, higher peak. All right. I'm going to put the next higher trough here and the next higher peak all the way up here. So series of higher troughs following the higher peak upwards. That's an uptrend. No surprises there. We looked at the trend following indicators on the monthly chart, uptrend. Okay. Where it gets interesting here is when we see there's this overbought condition, and we made note of this on many morning market reviews that at some stage that NASDAQ is going to correct. It can't remain overbought indefinitely. That's not the way the RSI works. The RSI is very good at showing overbought, oversold conditions. The weekly chart, it's a bit tricky to use the RSI for timing purposes, because the correction can take place this week, next week, 2 weeks time, 3 weeks time, and it did take a few weeks for this to unfold. But by and large, what's happened is that the oversold condition, I beg your pardon, the overbought condition is now starting to correct. Okay, we're starting to normalize, and I think that makes perfect sense. That makes perfect sense. It's normalizing during August, so August is going to be a down month. Okay, it seems like August is going to be a down month, unless we have something spectacular happens over the next 2 weeks, which seems unlikely given how high the real yields are. Okay, but as long as we have the series of higher troughs followed by higher peaks, the uptrend is contained. Markets never move in a straight line. They tend to zig and zag. And if that's the case, the pullback in the NASDAQ is something for us to keep an eye on, because it could be an opportunity. It could be something that we could exploit. How come? All right, let's just bring up Microsoft Paint. And the primary trend I'm just going to represent with an arrow. So if we've got a primary trend to the upside, which is what the analysis seems to suggest, well, that's fine, but there are intermediate movements. Markets don't move in a straight line. To get from the bottom to the top takes time. It's got a flow to it. It's got an ebb and flow. It's got a zig and zag. But one thing that we can say is that every time we have a correction, well, that makes the next impulse move quite exciting, assuming it comes, right? There's this impulse move here, there's the impulse move here, there's the impulse move here, and now we're looking for the next impulse move, but we don't know if that's coming. We don't know if that's coming. Okay, I put a question mark there. That's kind of where we are at the moment with NASDAQ. We've got these high real interest rates which are weighing down on the NASDAQ. Unless we see some sort of give on the real yields, NASDAQ is going to be under pressure. But what we can look for here is a bullish reference candle. Okay, if we get a candle that has the lowest low in at least 3 candles, well, we're missing the third candle. We've only got 2 candles here. We've got the lowest low. What we need is a candle that looks something like this. If we get a candle like this, that would be very, very compelling, very interesting, because then we have the condition 1, which is the lowest low in at least 3 candles. Condition 2 would be price taking out the reference candle's high. Condition 3 would be closing above the reference candle high. Well, if we get that reference candle there, we're potentially moving into an impulse move. But it's a dual analysis. Okay, we can't look at NASDAQ independently now. We've got to, in my opinion, keep an eye on the real yield as well. That real yield is really overpowering risk sentiment at the moment. And we can see if that comes down, then potentially we get some movement up in the NASDAQ. Potentially we get some movement up in gold. Potentially we get some pullback in the US dollar. But this is all supposition at the moment. It's all hypothesis. So we're going to watch the real yield from now, see how it develops. As Raj mentioned earlier, it is in uptrend, and that is weighing mightily on the risk markets, and we can see how that is feeding into the pullback in the NASDAQ during the month of August. Okay, if there's any questions, please go ahead and type those in. But is the US dollar going to break resistance? That's a question from Kim. Well, Kim, I don't know. We can't make any sort of predictions. What I can say is, if the real yield carries on moving upwards, okay, if it carries on moving upwards, and there are pundits that seem to suggest that it's going to move upwards, then I would think that the US dollar is going to break resistance. then I think that it really is now going to depend on the direction of the real yields. Okay, what can we look for to see if this is a key reaction level? We can't predict. Okay, if we predict, we're going to be most likely wrong. We can only react. You know, what we can do is we can see, okay, well, is there going to be a reference candle reversal here? So we can't act until we get the signal. Okay, so we have to be patient now. So we've got to be patient now. I beg your pardon. Sorry about that. We've got to be patient. And to do that, we're going to have to get another candle in here. And we've got to get that candle to cooperate with the reference candle reversal. So again, we are at least a week shy of the information we need. I hope, Kim, that helps to some degree. At the moment, we are really in a tough environment. It's what we've said. We don't have the signals to suggest trend. It's always easier to trade trend than trading range. Okay, any other questions there? Any other questions? All right, nothing coming through. So what I suggest is we conclude at this point. Have a great day ahead. Thanks, Matthias. You too. Have a great day ahead. Have a great evening ahead, and we shall chat tomorrow morning. Thanks very much, guys.